Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq 100 performance, trends in the Nasdaq Volatility Index. We'll also take a look at the 10-year and discuss inflation in front of the Fed's rate hike decision tomorrow. Shawn, it's great to see you as always. And certainly, in addition to geopolitics and the inflation conversation, investors are really bracing to see what comes out of this meeting tomorrow with the Fed.
Yeah, and I think right now for markets overall, particularly if you're looking at the Nasdaq 100, the volatility, it looks like it is causing some pretty big swings, and you never know when something else is going to come in to maybe add or take some of the pressure off of equities. But this week, I think we started the week out with news that there were lockdowns going on in China, and that was probably going to add to an already challenging supply chain outlook from what's been going on between Ukraine and Russia. But now when you get those, and even after getting sort of that 1-2 double whammy on the supply chain front, we're still seeing that 13,000 level hold for the Nasdaq 100. So I'm going to continue to watch that. And I think the more you see that hold, I think that one can reassure markets a little bit that we sort of know where the bottom's going to be as we start probing some of those lower levels. But also, if you're asking yourself, are we hitting maybe a new regime here, or has something changed significantly to the concerns and the uncertainty for the outlook? I think if you see us breaking through that 1300 level, that to me would mean there's a significant escalation in fear out of the market. But looking for maybe a signal that things are really starting to clear up, I would look at vol Q, and if you see vol Q break back below that 30 level, to me, that would be a sign that we're at least on the path to a significant bottoming, some stabilization, and we're ready to maybe start testing some of those levels on the upside that we may not have seen for a couple weeks now.
Right. And Shawn, if we take a look at the 10-year, anything from the fixed income markets that you can discern?
I think it's always interesting for me, not just the level that interest rates are at, but how fast they got there. And I was watching sort of that 1.7 to 2% level in the 10-year for that range that we were going to move back and forth between. And you would rightfully say that seems like a pretty big range for a Treasury yield to be moving around in. But when you put it next to what we're seeing just in terms of some of the volatile moves in the market, it kind of makes sense. But seeing us break above that 2% level, and not just slightly above there, but actually meaningfully above that 2% level, I think it lets you know that some of these the inflationary pressures we're seeing, and they continue to build, and it seems like we're not going to really get to the other side of these with any sort of certainty of the inflation outlook anytime soon. That really puts a lot of pressure on the Fed. And so the real concern is if they maybe do too much, they might stifle growth. If they don't do enough, then you can start to see inflation expectations get a little bit unanchored.
And speaking of inflation, let's wrap up with that, Shawn, because really this is what the market is predicated on right now. The inflation concerns because of geopolitics, which existed well before then anyway. I mean, there's a lot of things happening under the surface, besides just the recent headlines of the past couple of weeks.
And I think that it is something that if you look at inflation expectations, and this is basically a chart where they go out there and they say, okay, 5 years from now, if we just drop you into 2027, what will you expect inflation to be over the next 5 years? That's what this measures. It's a very popular measure of what inflation is actually being priced in to not just fixed income securities, but a lot of other securities across the board that have some sort of interest rate tied to them. And this is telling you that it is in flux. There's a lot of volatility in here. And we actually got that coming down a little bit. And I thought it was interesting that those inflation expectations seemed a little bit low, but they've certainly taken off. And I think this sort of captures why get the Fed getting this right, and not only what the decision is, whatever that may be tomorrow. Right now, the market's looking for 25 basis points, but I think it's what they signal for the rest of the other tools that they have in their monetary policy toolbox, particularly when it comes to the balance sheet, asset purchases, anything else. There's a lot that the market's looking for, and the Fed needs to get this right, or you're going to see inflation expectations continue to become even more unanchored, and that can really induce a lot of chaos and volatility, not just into the economy, but also into capital markets as well.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.